We go back in time and we think about the last cycle, right? We think of BlockFi, Genesis, Celsius. We think of all these centralized lenders, and that was where you went and got your yield. And unfortunately, giving up your keys historically works out very bad for Bitcoiners. And I think there's a very natural hesitation to that, which is a healthy skepticism, I think. And we really built something for Bitcoiners by Bitcoiners that we're comfortable putting our own Bitcoin into. Bitcoin is the most interesting thing to happen to Wall Street in the last 2 decades. And there's so many interesting products and services that are getting built within the next 5 years. Every bank is going to be custodying crypto, either directly or through someone like Coinbase. But this train has left the station. There's absolutely no one stopping it.
Hey guys, welcome back to another show. Today I'm here with CoreDAO CEO Rich. How are you doing today?
Doing really well. Excited to chat here today.
Likewise, we had a beautiful chat off camera, so I'm super excited to have you on the show today. And you have a fantastic background, by the way. So for those who don't know, do you mind to give us an intro and tell us a bit about yourself?
So I got into Bitcoin back in 2013. I had heard about it back in 2011, but didn't really understand it. It just too complicated to me. It was like almost too computer sciencey at that point, even though that is what I studied. And I love engineering and technology. I just didn't kind of grasp the idea of non-sovereign store of value. It didn't really click to me. It was kind of like there's money in the computer thing at that point. And by 2013, I did another deep dive into the Bitcoin white paper and really understood what Satoshi was after. And then all of it clicked. It was a non-sovereign store of value. It was this ability to go create from nothing and have this digital native currency, this better digital gold. And I was just totally hooked. And that's when I first started to get involved in the Bitcoin ecosystem. By 2017 cycle, and I had heard about Ethereum back in 2014, 2015, but the idea that it all kind of clicked in the 2017 cycle around you can have programmable money now, right? It's not just gold. You actually have the ability to go bring this into higher order, higher utility use cases. And that's more or less when I planted my flag and I was like, this is what I want to do for the rest of my career. It's like the perfect mix of my interests in terms of technology and computer science and economics, which I also really enjoy and studied as well. And then I found my way to Coinbase for 4 years. I ran money movements engineering, so a fairly large team, was responsible for moving about $1 trillion during my time there, learned the ins and outs of crypto exchanges and what sort of businesses those are and the interesting different ways that you can innovate around the surface. But ultimately, Coinbase's business, in my opinion, was very focused on Ethereum. And I have always been much more of a Bitcoiner than I have been an Ethereum person at heart. And I had noticed that the space also had drifted away from that quite a bit, right? This is 2021, 2022. And as a part of it, we had kind of shifted away from what made crypto. And in my mind, that's decentralization in favor of performance. And those were trade-offs that, in my opinion, aren't really kind of with the true crypto ethos, right? This is one of the reasons Bitcoin is so important. And I would argue is the most important piece of the scalability trilemma is actually this decentralization. That was really kind of the idea of going back to the roots, going back to Bitcoin and trying to say, how do we scale Bitcoin? How do we add more utility to Bitcoin? We have the hardest money that the world will ever know, but people are using it as a digital pet rock today. I know people want to go do more with it because I want to go do more with my own Bitcoin. And that was really the genesis. And, you flash forward, another 4 or 5 years and here we are. But it's been a hell of a ride so far, and we're still so early in the journey.
Do you feel like something has clicked ever since the new administration, Trump, won the election and they started pushing the whole sector? I mean, of course, crypto, but as well as Bitcoin. Have you felt something in the force changing?
So I think it actually started during the last remnants of the Biden administration with the spot Bitcoin ETFs. I think that was really this watershed moment for Bitcoin. And I thought we were getting these in 2015, and then I was positive we were getting them in 2018. I was only wrong by almost a decade. But I think that was really the watershed moment where Bitcoin was now legitimized and accessible by the true financial system merits, right? So now anybody could have access, whether you're in a retirement account, you're a family office, a hedge fund, you have the ability to kind of go own Bitcoin where you might have been limited by custody or other types of restrictions prior. But then for Main Street out there, now it's no longer scary, right? Different RIAs can now have their clients put in Bitcoin and not have career risk. It just de-risks so much of that. And that was why it was just such an important moment. The inflows and everything else even validated that they just exceeded, all the most bullish analyst expectation. And then I think you flash forward to the summer of 2024 and you have the Bitcoin conference where Trump is going on stage and he's starting to make these promises around the strategic Bitcoin reserve and not prosecuting, US crypto projects. And Then we've obviously seen this year those actually get realized and lived up to, which has been amazing to see this promises made, promises kept mindset. But now we're on this unstoppable train, if you will, right? Like Bitcoin has gone from fringe, when I first got involved to now part of the financial system, and now probably even the most interesting part of Wall Street. Like having, a very unique viewpoint that I do at Core, not just on the decentralized space, but also talking to all the institutional players. Bitcoin is the most interesting to happen to Wall Street in the last 2 decades. And there's so many interesting products and services that are getting built within the next 5 years. Every bank is going to be custodying crypto, either directly or through someone like Coinbase. But this train has left the station. There's absolutely no one stopping it. And it's such an exciting time because for folks like Core, we're trying to attack a market that's now about 2.5 trillion. That's about 1% penetrated from a utility point of view. Like it's so small. And there's so few markets in the entire world that resemble anything like that you'll ever see in your entire lifetime. And to been, kind of waiting for this moment for the last, 12 years or so is amazing. But we couldn't be in a position to take advantage of it.
I would love to learn more about Core. I mean, can you give us a 360 on what you guys are doing exactly?
So the way to think about Core is really in two dimensions. So on one side, it's the leading Bitcoin application platform, or like a Bitcoin app store is kind of the way to think about it. There's hundreds of projects that are live, but 1 million weekly active users, hundreds of millions in liquidity and TVL, but a thriving and robust ecosystem. And on the other side is the highest yielding Bitcoin staking protocol. And there's hundreds of millions there earning passive yield on their Bitcoin. And what's critical is that both sides are united by the Core token. So people that use the Core token for transaction fees and the usage of the network then help to give the yield back on the other side to the stakers. And it kind of reflexively works both ways. People also acquire the Core token to get higher staking yields. And it creates this really nice flywheel between both sides. And I think what we picked up on, very quickly and is now becoming a little bit more kind of commonplace understanding is Bitcoiners are an incredibly diversified set of participants. And many of them have very different trust assumptions that they want to deal with, utility desires and goals, yield desires and goals. And it's important that we have different products and services that align for each one of these different participants versus trying to square a peg in a round hole or have people do things that they're uncomfortable with. So the way that we think about the continuum is many folks are just ready for education today, right? They're not ready to even kind of do anything with the Bitcoin. They just want to hear about it, understand. And that's what we can offer a big part of the Bitcoin kind of just hodl it user base. But then there's another big swath of people that want passive yield in their Bitcoin. They want no principal risk, but they want to have staking yield. And that's where Core's dual staking comes into play, where you can earn high yields in your Bitcoin while critically it stays in your wallet or hardware wallet, which is the first of its kind product. But you can now go put that to work without having to bridge, swap, etc., to kind of go bring it into a DeFi ecosystem. If you are ready to go into a DeFi ecosystem, you can do anything that you can do in any of the Ethereum protocols, but have it be Bitcoin based. Where it's Bitcoin based, you have higher APYs, more amounts of utility, and then also some interesting Bitcoin native protocols that are also kind of unique to our ecosystem. But there's a different product and service at every level of that spectrum. And our goal is to bring people from one side to the other on their Bitcoin journey. Many people will not make it all the way to the end, and that's totally okay. We want you to stop wherever you're comfortable for, because that's ultimately how we not only earn your trust, but we actually deliver the products and services that you want. And that's been a big miss in crypto for, I'd argue, for like the last decade or so or close to it, where it's like building stuff that people think is interesting, but actually people don't want to use, that have no product market fit. And then trying to force people to go use these protocols. And I think we're past that. And that's the natural, healthy evolution of the space is build stuff that people want. And this also applies to institutional products because we have people that have these ETFs. I think you're going to have yield-bearing ETFs powered by Core, a bunch of digital asset treasuries that are using Core staking yield. So we can really kind of play up and down this spectrum for any type of investor or just user.
Thank you for explaining it so well. And it's such a missing piece because I can see already a ton of use cases. Like you said, you can be a Bitcoiner in so many different ways. I think it's a spectrum, right? You can hold an ETF position, you can trade, you can just have a metal plate buried into your garden. It's up to you how much you want to be a Bitcoiner. Yield is probably something that I think we've been missing for quite a bit of time, because if you are plugged into the Bitcoin standard like I am, I have next to no fiat under my name, I am forced to sell my stack to survive. Do you think the yield is going to unlock another wave of adoption, if it makes sense?
I think it's already started to do that, and it's been this critical missing ingredient to your story that I totally agree with. And I think there's good reason for why it's been a missing ingredient. We go back in time and we think about the last cycle, right? We think of BlockFi Genesis, Celsius. We think of all these centralized lenders, and that was where you went and got your yield. And unfortunately, giving up your keys historically works out very bad for Bitcoiners. And I think there's a very natural hesitation to that, which is a healthy skepticism, I think, particularly coming from a Bitcoin point of view. And we really built something for Bitcoiners by Bitcoiners that we're comfortable putting our own Bitcoin into. And that's a big difference from many others that are just trying to essentially farm their users. We wanted to build something that will stand the test of time and that people can deploy into and feel safe because they ultimately have those private keys the entire time. And they're getting yield from time locking their Bitcoin. So they only trust Bitcoin. But by securing the core chain, you receive rewards for doing so. And having this passive yield, to your point, unlocks a bunch of new opportunities. So one, you can just sit on your Bitcoin, have passive yield, and use that to acquire more Bitcoin or take a position in core and earn higher yields on your Bitcoin. That's one group of folks. Other folks are doing more interesting kind of combinatoric things. So you imagine you have your Bitcoin, it's staked, it's earning passive yield. You're borrowing stables against that to go pay your bills. And you have kind of this buy now, pay never self-repaying loan. That's super cool, right? Like that's for people like you that can hopefully live on the Bitcoin standard and just bet on the price appreciation of Bitcoin plus this passive yield from core. That's a killer combo. And you can continue to make that arbitrarily more and more complex, if you will, but having this staking yield makes this entire complex that much more efficient. And if you want to go into lending or you want to go into basis trading or things that actually kind of involve giving up, custody of your Bitcoin in some way, we make it more efficient, right? Because you actually can have this staking yield that comes alongside of that gives you a return enhancer. Again, still do your own research, not financial advice, whatever else. But it makes all of those markets that much more efficient, and I think that's something that we're super excited to be at the very forefront of, because this is how Bitcoin goes from just a store of value to being used for more utility. And I think ultimately that's what all Bitcoiners want to do is they actually want to use their Bitcoin in some way, and this allows you to unlock some of that value.
What do you think are the biggest risks in going into lending and borrowing versus your Bitcoin?
Lending and borrowing, you give up the keys to your Bitcoin, you're fully trusting that group to give you your Bitcoin back at some point. Now, there's different assurances that you can get that can, de-risk that, and the borrower quality and who the borrower is like really matters in these types of arrangements, and froth of the market cycle, what they might be doing with that collateral. Like you really have to extremely due diligence, all of the use of the borrow in that case. For a lot of people, they're not willing to do enough due diligence to actually like sign off on it. It's just, okay, that sounds good. And okay, that sounds good is how you wind up losing your Bitcoin stack. And you just need to appreciate those risks. And in our opinion, you need to be compensated to go do that very heavily if that's what you want to do. So if you have an alternative like Core, where your risk is liquidity risk, so because you're time locking that Bitcoin on Bitcoin, you cannot move it for some duration. Now it's a minimum of 1 day. People tend to do it longer. But if you are locked up and you need to go sell that Bitcoin, Bitcoin won't let you. It's not that Core won't let you, right? Bitcoin will not let you until that time lock expires. So you do need to manage that as like a duration understanding. But if you can get paid with Core's dual staking, roughly about 5% right now, to go loan your Bitcoin, you have to get paid multiples of that, in my opinion, right? Like if I'm now saying I want to go take counterparty risk as part of this transaction, do I need 10%? Do I need 15%? Like what is enough compensation that now makes that appealing? And I think that's the other very healthy thing we're doing for this like Bitcoin loan complex is we're actually pushing up those rates because you now need to go compete with this passive yield. And I think that's very healthy. It's also very, very skeuomorphic with how the traditional financial system works, right? It's like you have to go beat T-bills and the Fed funds rate, right? Like you have these, quote unquote risk-free rates that you then need to go out and build if you want to go add risk on top of it. So I think that's a very healthy dynamic, and how I think about it. Just for total disclosure, I don't have my Bitcoin lent out. That's not appealing to me. But for some people it is. And you just have to go different products and services, different risk thresholds, different return appetites. And there's someone out there that will be at every level of the spectrum.
tricky subject, right? Sometimes I talk about it, and whenever I have people say, "Oh, you never sell your Bitcoin," well, it depends. If Bitcoin is everything you have, how are you supposed to be surviving, right? And also, I would argue if you live into the Bitcoin standard, you will be way more cautious on how you spend it. So it all depends on your circumstances. Of course, if you have a normal job, you get paid in fiat, and you use Bitcoin as a saving account, which is one way to be a Bitcoiner, of course you don't want to sell it. But it's all a matter of perspective, right? How do you see banks embracing this? I mean, are you expecting exchanges to kind of become a bank? Is it going to be a weird mix of those two?
So before I answer that question, I think you're totally right. I think it's important that there's no right or wrong answers with Bitcoin. And I think that's one of the kind of religious zealotry things that we're like hopefully moving past is like Bitcoin is everything to different people. And it's just important to understand that like how one person uses their Bitcoin or how they view it, there's no right or wrong answers there. It's just important that you have an escape hatch from this existing financial system that you never had before. And however you want to utilize that, go do so. But the idea of like telling people right and wrong and that sort of thing, I'm hopeful that we're past that. I did an interesting podcast about a week and a half ago where we talked about kind of maxism and just generally how a lot of that's being going away now, which I think is a big win for all things Bitcoin. To your question of kind of the integration with TradFi and banks, I firmly believe that every major bank in the United States will be and globally will be custodying Bitcoin within 5 years, unless you're like a total laggard and don't really care about being competitive long term, because there's huge demand from different customers to go use this, whether they're institutions or individuals, because people want to use Bitcoin as collateral. It's a hedge on fiat debasement and all of these kind of various macro headwinds and tailwinds, depending on the cycle that we're facing. And there's just tons of demand for it. And like banks are businesses, they're in the business of profitability and keeping their customers happy and not having them go to other banks. So I think they'll just get competed away if they don't integrate it. I think those will largely be facilitated by folks like Coinbase. Coinbase has a very interesting offering now, their crypto as a service, where they'll handle all the custody and kind of create very nice APIs for different banks to work with. From a banking perspective, it's all kind of handled by Coinbase or another one of these providers in the hood. But from a user perspective, it looks like Chase or Bank of America or JP Morgan, whatever, name your large bank as time goes on. But I think that's going to be what banking looks like. You're going to have your fiat, you'll have your Bitcoin next to it, and then what are the assets afterwards? Hard to say. And I don't think it's going to look like an exchange where you're going to have like hundreds and hundreds of crypto assets or thousands of crypto assets that are all there. You're going to just have some majors. But that's where I think it's so interesting to have groups like Core that are in place, because the next stop after custodying your Bitcoin with a bank is how do I go earn yield on it? And I think that there'll be a button that says earn, right next to it. And that's where we come into play. And I think there'll be a bunch of service providers that are, vying and trying to go compete for those, sacred slots as part of these. We think we have a great shot to win in the Bitcoin yield space. But I think that's how all these things kind of blend towards one over the next few years. I think banks, exchanges, all those are going to grow alongside of the growth of crypto. From my deep Bitcoiner perspective, thing that I have to call out here, I do think banks fully embracing Bitcoin is actually how you get large amounts of Bitcoin rehypothecation. And I think that is part of fractional reserve and like how the banking systems emerged and all of that. And I think that is something we all have to be very cautious of, because I think yes, banks are out there to go make money, as are all businesses, and having this new asset that is very, very much in demand. We'll just have to be very, astute as, users of these institutions. If we can't self-custody, if you can self-custody, always do so. But as you get in there, it's gonna be, okay, what sort of rehypothecation guarantees do you have? Like all of that will become very nitty gritty in the details, because I think if left unchecked, Bitcoin just becomes a new vehicle for some of the bad habits that we don't like in the traditional financial system. So maybe it's not all rosy. I think it's good to give both sides.
We won't be able to see $1 million Bitcoin without certain players starting to enter the game. And when that happens, there's probably going to be some trade-off, right? Like you said, even the ETF itself, some people they come on the show, they say, oh, I hate the ETFs. Well, then go and self-custody, right? The ETF is going to allow, that's my opinion, broader adoption. And then maybe, who knows, someone is going to start with an ETF and 6 months down the line, they just go self-custody, right?
I mean, I hear all sorts of takes on this. And as a Bitcoiner for a very long time, of course, I will always, promote self-custody to those that can. But we have to be realistic that the vast majority of folks in the world, whether they're institutions or retail folks, can't self-custody. And you need to give them kind of the next best thing. And I think the next best thing are the ETFs in this case. Maybe in the future we'll come up with some new instrument that is, more efficient. But I think this has been massive for Bitcoin. I totally agree with you. I don't think we would have ever seen, maybe not ever seen, but I don't think we would have seen 100,000 nearly in the time that we did without the ETFs. They've been huge structural drivers of demand. And I think you're just going to continue to see that grow as different institutions recommend. Now it's like 2% allocation to Bitcoin, 5, 10, it's going to continue to grow. And you're going to see these as like kind of passive stores of Bitcoin. And yes, it creates some centralization risk and that you get it's kind of a one-way door with many of these ETFs. But I don't think that's necessarily a bad thing long term. It's just more people getting exposure to these assets in a way that, they're comfortable with. But I do hope we see that trend more and more, either based on regulation, more people getting comfortable with the technology, like you name it. But we're now 16 years some odd into this Bitcoin journey, and self-custody is really hard for a lot of people, right? And we just have to accept that. We're kind of tip of the spear in our willingness to do this sort of stuff, and your average person won't. But we want everybody to hold Bitcoin. Like fundamentally, that is why core exists, and that's why we've been on this mission. I believe everyone in the world should have Bitcoin. I don't believe it can all happen on Bitcoin L1. It's not scalable enough. So we need to have other mechanisms which they can do, like core, in like kind of more self-custody, decentralized approach. ETFs, another wrapper, right, where you give people access in a different way. But I think all 8 billion people should have it, and they should use it as a savings account.
I completely agree. I subscribe to the Jeff Booth idea, which is Bitcoin is my enemy's money. Imagine saying something like Bitcoin is decentralized, open, permissionless, but bank can't have it. ETFs, no, we don't like it. BlackRock, no, they can't buy it. Well, then it's not going to be none of these things, right? We have to open. And when you open, it doesn't matter who comes in, right? That's the point. We already have a monetary system who controls certain things. We want to go on the opposite, which means it's my enemy's money.
I've never heard that term, my enemy's money, but yeah, I totally agree. I mean, and I think this is where, again, like kind of that Bitcoin maxism like ideology, I think is healthfully starting to fade. I think it was very important to get to where we're at. Don't get me wrong. And I think like at the early phases of any religion, and I think Bitcoin is a religion, you need people who are heretics. They have very staunch and ardent beliefs, and they believe they're changing the world. Like all that is very critical, whether it's Christianity or Bitcoin or you name it. And I think that's so important. But at some point, it becomes kind of more commonplace belief. And as you get to kind of more commonplace belief, you need to start to open up, potentially a little bit of new horizons, become more forgiving, et cetera, et cetera. And I think that's kind of where we're at now in terms of giving people access in different ways and just appreciating that all of this is good for Bitcoin. And I think this is how we get to $1 million a coin or more in a healthy way. Like one of the questions that I get very frequently from friends, family, colleagues, et cetera, is like, when does Bitcoin hit 1 million? And my answer is always, well, I hope it's not tomorrow. Because if it's tomorrow, like the world has collapsed around us in some sort of like, hyper accelerated way. We want to slowly earn that through like real adoption and real use cases. And that's actually how we hopefully get on a Bitcoin standard long term. Because I do think the existing central banking, unstable monetary policy setup that we've been in for the last, several decades isn't sustainable. It's hyper accelerating into bad places. And I do think we get to a point where Bitcoin becomes more important than the dollar, but we don't want that to be tomorrow.
People ask me the same questions, and I always reply and I say, well, you have to also consider the purchasing power by then would be significantly less because inflation is not 2% a year. I mean, I wish.
8%. It's like, if you look at the Real Vision stuff, it's like they targeted 8%. I haven't fact checked all that math or whatever, but like anecdotally, it seems plausible. And if you look at, it's been two assets over like the last, like since 2008, I think that have outperformed that 8%, and it's the NASDAQ and Bitcoin and nothing else. That's a pretty strong case for Bitcoin and tech stocks. So yeah, you know where I'm allocated.
100%, I agree. And also there is shrinkflation, I talk about it all the time. I don't go to McDonald's, but I was scanning through Twitter the other day. I still call it Twitter. I'm not even sorry, by the way. And I've seen a Mac index. It was much larger in size, besides the cost, which, okay, we covered it with inflation, but the size as well was significantly higher. And I would also argue the quality of the burger itself was probably better.
Yeah, no, shrinkflation is very real. I mean, and just the costs, like in the US, even since COVID, are just extreme. And if you do, like, this is only going to accelerate, right? And like we even said, as part of the whole tariff tantrum, everything else, like the US has decided that the only way to actually solve this is to grow our way out of it. And it's really a bet on long-term productivity growth from AI or, some other sort of, interesting kind of piece there. With that, you just have to assume that fiat debasement will only accelerate. And that McDonald's burger that was $4 pre-COVID is going to be $20 in 3 years. So, like, you just have to accept that that's the world we're moving towards. And I think there's two different viewpoints that you can have. It's I'm going to fight it, or I'm going to kind of adopt a new standard. And I think that's where Bitcoin becomes so important because it gives you this escape hatch. Because one Bitcoin is always equal to one Bitcoin, and that's just the most critical piece for anyone to understand is you just can't devalue it against itself, and it's the hardest money we'll ever know. And again, I've been on this train for a while. I feel like I'm preaching to the choir over here as someone who's been on the Bitcoin standard for years, but I feel like we can't get that message out frequent or often enough.
Where do you think we are in the cycle? Do you feel the heat of a potential top? Do you care? Do you honey badger it? What's your view here?
So it's a great question. I don't really care because I'm so convicted on Bitcoin over the long run, as am I with Core. And I think about like just this cycle is so different if you even want to call it a cycle. Previously, I think so much of it was driven by M2 and global liquidity, and I think that has a big impact here as well. Plus, you have cutting rates, easing to the U.S., China throughout the last several cycles. Like if you look at that, I think all of those tailwinds are still with you here and are only going to accelerate as we go into likely 3 rate cuts by end of year, et cetera, in the U.S. side. On top of that, you just have such different structural drivers of demand for Bitcoin and now Ethereum, where you have these ETFs that are soaking up billions and billions of dollars. You have these digital asset treasury companies soaking up billions and billions of dollars. We'll do a pod on, Core's foray into this space not far from now. We can talk more about it. In general, these are just structurally different drivers of demand than we've ever had. It's not just retail, right? Like these are very large institutions, nation states, et cetera. And I think that train has just fully left the station. I think if you go into does that translate into Altseason and other sorts of pieces, that's a lot harder to kind of be more precise about. I think people are getting more specific. They're looking at more fundamentals. I think we have evolved in the space from that point of view. And not everything should go up every day. Not everything should go down every day. Like you should have dispersion. You should have real businesses that people are trying to underwrite. And I think that's kind of that healthy natural evolution. I think the 4 year cycle is still in play to some degree, but it's different. It's a little more elongated. So I'm of the view that like this really could be a super cycle here and could be kind of very different. But just one man's take who's been in the game for too long.
It does make sense because if you think about it, whenever you have different players playing the game, well, the game changes by definition. Now you have El Salvador, you have Michael Saylor, you have Bhutan. Those people, they don't care if Bitcoin doubles. They want to protect themselves from erosion, from inflation, right? So I know that we say all the time, this time is different. I understand, but it is always different. It rhymes, we say. It's never exactly the same, but if there was a chance on something going a little bit more different, well, the ETF, I guess, and of course the US administration, we have to talk about it because it had weights, right? Like having Trump saying we're going to have a strategic Bitcoin reserve, I don't think it's priced in yet. And then I believe people are going to gamble, right? So I call it rotation of capital, whatever people call it, altcoin season, whatever. Whenever someone has made decent amount of money in Bitcoin, let's say they've gone in at 80,000 and this thing has gone to 200,000, they will take a portion of that and they'll gamble it on Ethereum, Cardano, Solana. Of course, because we are humans and we buy scratch cards and we go to the casino, right? Is it going to be as impactful as before? Probably not, because the amount of tokens in circulations are more. So maybe spread across those tokens. But I think we will see a rotation at some point, 100%.
I think we're just going to see these like kind of pockets of like interesting kind of behavior, but I think some of these that have real fundamentals and institutional credibility will continue to outperform. Like people love to gamble. I think that's like a lot of the Solana thesis. It's like they invented like hyperspeed gambling in kind of a new way with meme coins, and there's a lot of a lot of retail adoption for that. So I think people will naturally kind of trend towards those things. I'm hopeful that people will look kind of one level deeper and all that sort of things, like what people are actually trying to do. But I think you're right. Things always get stupid at some point in the cycle.
Maybe retail is going to FOMO into MicroStrategy or MSTY as opposed to a random token.
I think you're also seeing this even with the crypto stocks that have gone live, right? Like you saw Circle, you've seen Bullish, you've seen Figma to a degree. Like, so just in general, like, people want exposure through these trad markets through Robinhood. And I don't think that like all these things are metas, in my opinion. Like similar to like GameStop was going on at the same time as Altseason. Like these things don't need to be exclusive. It's just where kind of the eyeballs and the attention and the returns ultimately are. But it will shift. And like right now, this crypto tech stock meta is like very strong. It is taking a lot of the marginal dollars, but I do think it will shift back. It kind of goes back and forth and oscillates.
And are you expecting treasuries to kick in like hardcore? We've seen a bunch so far. Some have acquired some Bitcoin, some haven't started yet. Do you foresee like a wave of treasury coming in and pushing the whole thing up?
Yeah, I'm very long digital asset treasuries because I think it actually solves. I use that a little broadly. If focused on assets that make sense and like are actually trying to do real things, particularly Bitcoin, Ethereum, etc. I think these are actually very accretive because it gives you levered exposure to the underlying asset, and it gives you a way to increase your Bitcoin or Ethereum or Solana, etc. per share in a passive way as a holder. And I think you need to trust the manager, if you will, whether it's Tom Lee or Michael Saylor, or whoever that is. But in general, I think that's a very interesting and appealing vehicle for many people to get exposure. And I think these things are going to grow so much larger. Like my bet is that in the next 3 years, we have at least 10 digital asset treasuries that are in the S&P 100, not 500, but 100. Because I think maybe 5 years, between 3 and 5 years, we'll go with that. But I think people haven't appreciated how large these things are going to get to because of that different access that it gives and just the power of this levered acquisition strategy. So I'm super bullish on these. I do think there's way too many so far. There's going to be way more that come out by end of the year. And I think a lot of these will wash out as the MNAV compresses back down to 1 and people can't continue to go increase their Bitcoin per share, or they fall below MNAV, might need to sell the underlying assets, etc. But I think what it's going to do is it's going to just allow Saylor, Tom Lee, whichever kind of industry or whatever asset you're in, to go be this buyer of last resort and start buying these assets for 80 cents on the dollar, 50 cents on the dollar, whatever that is. And these things are going to grow even faster. And I think that you're going to see this wave, let's call it 18 months from now, probably when a lot of these get distressed. And you're just going to see an inordinately large boom in some of the largest ones. And I think at that point, you'll probably have who's the Uber, who's the Lyft of like, kind of each one of these different assets. But right now, the competition is going to be ferocious. And many of these haven't even gotten access to their capital yet. That's the other piece that I don't know if like retail understands. Depending on the structure that they use, whether it's a SPAC, an RTO, a minority investment, a bunch of different ways that you can go create one of these treasuries, you may or may not have access to the underlying capital for 6 months plus. And I think that's what is just interesting with, depending on the strategy, you can go hit the at-the-money offering like Tom Lee multiple times a week and be, as aggressive as you can. In other cases, you're still, waiting for the transaction to close, et cetera, and you don't have access to it yet. But there's many billions of dollars on the sideline ready to kick in.
Completely agree. Also, I believe the ETF will follow the same destiny. I think we have way too many. And I think in a few years, like you said, we're going to see some players dominating the market as it happens usually. What is the biggest thing you've learned in your journey into Bitcoin?
So it's a little trite because I give the same example all the time, but I think it's useful to just like rinse and repeat kind of frequently. Crypto in general, and I'll extend that to Bitcoin, but like crypto in general is all about like short-termism generally. And what's so important is to think on a longer term time horizon and to play infinite games with good people. And that's ultimately how you have success. So much of crypto is playing finite games. Like people are just trying to make short-term dollars or do something that isn't kind of in the right lens, if you will, to more turns of the wheel. And I think that's something that everybody should appreciate. And I give out this book, I don't know, 10, 15, 20 times a year, whatever, called Finite and Infinite Games. And it really changed my thinking on, one, how to do business and how to interact with people, but also just how to live my life. And I think it's such an important one in crypto where with all of the short-termism around you all the time, you always have to be kind of looking at the light at the end of the tunnel and always driving towards whatever you think will help you make your dent in the universe. And if you do so, you can have a real impact. And I think if I go back to, Bitcoin 12 years ago when I first got involved, it's grown so much faster, so much more important than I ever would have guessed. And being able to ride that wave and trying to, build something that, is symbiotic with Bitcoin is probably the best decision ever made. Trying to do that is how I know I kind of keep the turns of my wheels spinning. And I'd encourage everybody to try to come into it with this mindset, and I think you'll be rewarded for doing so.
Delay gratification is probably one of the pillars to be a better man, I guess. So thank you. Thank you for sharing it. Of course, guys, you will find in the description rich details. Make sure to go and check him out. Love your Twitter account. Thank you so much, man. It's been an absolute blast. I enjoyed our conversation.
Awesome. Looking forward to doing it again soon.
Fantastic. And guys, thank you so much for watching. We'll see you on the next one.